In this chapter, the author explores the reasons why companies raise dividends. He explains that there is often a difference of opinion between management and investors on what to do with the cash on the company's balance sheet. Management wants to keep the cash for acquisitions and growth, while investors usually want. The author uses the example of a restaurant to illustrate this point. He also discusses the case of Microsoft, which didn't start paying a dividend until 2003 despite having a large amount of cash on hand. The author then delves into the debate between management and shareholders on who can earn a greater return on investors' money. He explains that management teams believe they can put the money to good use, while investors argue. The author also discusses the difference between stock buybacks and dividends, explaining that buybacks can be used to manipulate earnings and are often used to offset employee stock option plans. He argues that a strong dividend policy is a sign of capable and confident management. The author concludes by discussing the importance of dividends in attracting the right shareholders and sending signals to the market. He explains that companies that raise dividends year after year tend to outperform the market. Overall, the chapter provides insights into the motivations behind companies raising dividends and the impact it has on shareholders and the market. In the book chapter, Get Rich with Boring Dividend Stocks, the author explores the power of investing in dividend stocks and the concept of compounding dividends. The chapter emphasizes the importance of financial literacy and understanding basic concepts in order to make informed investment decisions. The author explains how reinvesting dividends can generate significant returns over time, even if the stock price doesn't experience significant growth. The chapter also discusses the drawbacks of actively managed mutual funds and the hidden costs of fees and expenses. The author provides examples and tables to illustrate the potential returns of dividend stocks and the benefits of long-term investing. Overall, the chapter encourages readers to consider the benefits of investing in dividend stocks and the potential for long-term financial growth. In this chapter, the author discusses different types of stocks that offer higher yields than typical dividend stocks. These include closed-end funds, real estate investment trusts, REITs, business development companies. The author explains how closed-end funds work, where the price of the fund is determined by supply and demand rather than the value of the assets. The author also discusses MLPs, which are companies that pass along most of their profits to shareholders in the form of distributions. The author explains the tax benefits of investing in MLPs and the potential risks. The author then discusses REITs, which are companies that own and operate real estate properties. The author explains the tax implications of investing in REITs and the potential risks. The author also discusses BICs, which are publicly traded private equity investment firms. The author explains the different types of BICs and the potential risks and rewards of investing in them. Finally, the author discusses preferred stocks, which are a combination of bonds and stocks. The author explains how preferred stocks work and the potential benefits and drawbacks of investing in them. Overall, the chapter provides an overview of different types of stocks that offer higher yields and discusses the potential risks and rewards of investing in them.